Welcome back to the show, everybody. We got straight fire for you today. We're going to hear clips from a Corda developer from R3, and he's going to tell you who he believes the real winners are in this new financial system. And a little bit of a hint before we get started, it's XLM and XRP. Let's go ahead and roll that beautiful intro. You're going to want all of this.
This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at BackupBradleyAbove and everything that we're talking about here today. Let's just tell you it's 60 cents, 0.6074 right now. We're ranging between 0.5850 and at the bottom, and at the top range, we are ranging at 0.6497. Now, you're going to want every bit of what we're getting ready to talk about today. And I want to shout out, for one, before we look at it, shout out to Maddie G. Okay, Maddie G TV. Make sure you go give this guy a subscribe, and I'm going to do it right now. And Maddie, this is an incredible interview that you gave, or you had this gentleman give for you here, explaining Corda, the XRP relationship, and XLM relationship, and it's straight fire. Let's go ahead and get started. I want to lay this out before we do. If you forgot, R3's Corda platform has 85% of Italian banks exchanging interbank transfer data on the Corda platform. It's a very, very real thing. For those that don't remember, R3 and Ripple used to be partnered. They had to go to court and break that partnership. That's where we found out back in the day that R3, in fact, had an options contract to XRP, which is worth over $1 billion at the time. And the reality of that is that if we are correct that that's how they dealt with most of their customer base, being Ripple, then in fact those contracts over the counter could be considered security instruments, but the asset itself does not have to be. So with that being said, but it could also be treated like a bond, and you're about to hear somebody else say that too, because I've said it a lot on this channel that we can't take that option off the table either. So banks across Italy are using R3's Corda blockchain to vastly speed the process of double-checking transaction logs. Now, I'm not going to read this whole thing, but it does say Silvia I'm going to mess it up. However, I'm going to mess it up. Head of Innovation at the Italian Banking Association said both the process of interbank reconciliation and the technology underlying the exchange of data had to change. That's what this is all about. It's the antiquated market infrastructure. That's why Brad Garlinghouse has called Ripple a blockchain infrastructure company. Right? And I believe that's why we've also seen what? The GameStop market manipulation, because they're able to manipulate the antiquated infrastructure. That's because, and by the way, and that was the big, I can't even get into it. But nevertheless, that was what that was, right? Then you have the U.S. oil pipeline, right? And that cyber attack, that's antiquated market infrastructure to be able to allow that to happen. Then the biggest producer in the meat industry, same thing there. This narrative is that the market infrastructure is antiquated and it's absolutely vulnerable. And we've seen absolute facts about that. So with that, we want to remind you that from June 15th, R3 said introducing the R3 Sandbox for digital currency, a new learning development platform for CBDC experimentation. You can request a demo there. And then I also wanted to play this for you because BNY Mellon is also a partner with Ripple in the latest R3 Digitalk. We hear how they cover the bank's approach for driving strategic partnerships, accelerated innovation. I want you to hear one particular part in here. Here, let's start.
We are strategic investors. So it's all about alignment. So there has to be really clear alignment with our strategic growth or a product and the priorities that we have in place about addressing client demand. So that strategic angle and strategic alignment is the number one proof point, right? The second piece is also working with our own technology team and having the company's technology validated by our own subject matter experts, right? We are coming into these investments having already really kicked the tires on these companies from a technology standpoint.
Yeah, he's not kidding, because BNY Mellon, again, has been partnered with Ripple for years. They know exactly who is who in this space, and you're about to find out too. This post originally came to me through the way of flareportal.com. And I appreciate you sharing this post. That's how I found it, even though it wasn't tagged. It's just how I found it. But if you want to see this diagram here, look at the diagram they put about the XRP tokenomics chart. And you can see this breakdown with the ETH, XDC, Corda, XRP Ledger, XLM Ledger, and Algorand. And everything of all of these assets can be issued from underneath of that. Keep this visual in your mind as we listen to the gentleman who is a developer talk about this entire system. And I don't think anybody could lay it out any better than this guy. And again, if you're not following Matty GTV, please do so. Let's give this guy support. 17,000 subscribers, not enough. Let's get this guy some followers here. And let's begin. So let's start right here. Right here.
Okay. So instead of trading the cryptocurrencies, you're trading in and out of the projects built on top of the cryptocurrencies.
Exactly. So if somebody, and if you go, do you have a BitTrue account?
A BitTrue, yeah.
Yeah, I kind of figured.
And a reminder that BitTrue has built their entire exchange off of what? The XRP Ledger, which is a decentralized exchange.
So if you actually go on BitTrue and you go on the if you go on the XRP listed assets, you can see some assets that are listed on the XRP Ledger, and I'm pretty sure Binance has some too. But the biggest thing, and yeah, people don't talk about this. So let's see if I could pull this up real quick, just to pull an example. So yeah, so a lot of people seem to think when they trade, they want to trade from XRP or trade from Bitcoin to dollars, XRP to dollars, or whatever. But there's a whole nother realm of, and this is assuming that you want to go the trading route anyway. If you were going to trade, there's a whole nother realm of trading that's not happening. That is just a huge opportunity spot. And the reason why it is a huge opportunity spot is because there's a huge lack of liquidity. So let's take a look at. Here we go. I'm taking a look at a coin right now, CSC XRPL, which is CSC coin that's issued on Ledger. So if you could take a look at this too. If you look at, or maybe I can share my screen, so I can do that real quick. Oh shoot, it won't let me share. It's all right though. But I'll just explain the concept real quick because yeah, not only can you trade on these platforms. This doesn't go just for XRP. This goes for XRP, XLM, and Algorand, and XDC. But the reason why Algorand and XDC, the opportunities aren't there as much is because they're not liquidity tokens like XRP and XLM. So the reason why liquidity tokens are important are liquidity tokens are going to be passed around almost like how typical money would be passed around, while smart contract platforms will basically be not quite hodled, but they'll hold on to it to use the technology to run their smart contracts. You see what I mean? So they're not typically going to be making payments with XDC unless they're making payments to another smart contract on the Corda platform in XDC. You see what I mean?
Boom. Did you get that? Well, let me tell you something. Brace yourself, because this young man is extremely bright and he's very good at being able to lay out how this system works because he's a developer on the network. So this is pretty incredible. Now I'm going to take you now, just skip through. And by the way, you should watch this entire thing. I'm going to share it on my Twitter. And shout out to Matty GTV again, and listen to what he says here. By the way, none of this is financial advice. He's going to give you an explanation here where he talks about how he likes to look at the world in value of XRP or gold rather than US dollars. Listen to this quick clip here. It's about 2 minutes, and I know it jumps around a little bit, but the conversation was open the way they were talking. But listen very carefully. There are, a million things in what he's saying as we move through this material. You're going to want each and every one of them is going to help you understand exactly how the new financial system is laid out. This young man is extremely brilliant. Listen to this.
For this strategy, I call it the basic liquidity algorithm, and actually I have a piece of code that executes this. But you can actually do this by hand if you really wanted to. It's really not a 10-step process, but there are 10 small parts to it. Okay. But what you end up doing is you go to an illiquid market, presumably on the XRP Ledger, and the reason why this only works on XRP. You may be going, well, why don't I do this on Robinhood or on E-Trade or on Coinbase? This only works with XRP. It only works because XRP can do transactions for so cheap that you can make, and I'm pretty sure you're familiar with every XRP is made up of 1 million drops and every transaction is 12 drops. Yeah. Well, if every transaction is 12 drops, including an exchange on the XRP exchange, if it cost me 12 drops to do an exchange, but I made 100,000 drops, well, I may have made only 1/10 of an XRP, but I got that guaranteed profit. Now, it doesn't matter about how little of a profit margin that is. What matters is how many trades are being made at that profit margin. That's why I have a bot that does this automatically.
That is a huge point he's making right there. Now think about this and scale that opportunity for a central bank, right? Not just somebody who wants to set up a bot, but scale this understanding of that point and that fact he's making to the tune of central banks and the trillions of dollars that moves every day, and that they can make that little fraction even in a lot of cases because it costs so little to actually use XRP. Keep listening. This gets better and deeper in just a few minutes.
But what you end up doing is you end up placing trades on both sides of the trade. And it sounds kind of silly because you go, wait, what do you mean on both sides? And it's kind of this weird thing where you take things out of dollars. But and actually, before I even get too into this, one of the biggest things, and I'll kind of get into this here, I actually don't value anything in dollars anymore. I either value it in XRP or I value it in gold. I actually believe the entire dollar system is how should I put it? A
Ponzi scheme.
It's worse than that. It's almost like a bank structured scheme to enrich the people that manage the money while impoverishing the people that use the money.
And listen to what he says. He is spot on here. Listen to how he lays this out. This is exactly the way it works.
It's like this, right? The banks tell you to put your money in the bank and save it. But you put your money in the bank for them to buy assets, for them to get rich off of, just for your money to lose its value so they can pay you back with cheaper dollars.
This young man is brilliant. I mean, he gets it.
I mean, you don't want to necessarily call it exactly a scam. It's one of those, you get the shortest end of the stick.
And that's exactly right. You do get the shortest end of the stick. And again, I am skipping over straight fire, but I want to get to the real meat here. And I'm going to let this play. He's going to talk about the Sum app by We'd Say When from XRP Labs, and he's going to explain consensus, and he's going to talk about how XRP is really for the banking system. Listen to this.
So remember I told you before how XRP is sort of set up in a banker type set way. So this app would be really good if you wanted to. You can the way you would issue your own token isn't the same way you would issue like an ECR20 token. But
and again, he's talking about the XRP Labs We'd Say When Sum app.
It's a lot easier than trying to go out and code it yourself. You see what I mean?
Okay.
So you can make your own token and issue it to yourself. Issuing it to other people is a little bit more complicated, but you can create a token very easily. And the reason why that is like I said, it's set up in such a banking manner to where you almost need an entire payment platform with accounts to do this, because in a system like that, you can already hook up the XRP accounts, the liquidity needed, but from one account to another account, XLM ends up working a lot better because I don't need in XRP, I need to have rights to not only the account that's issuing the token, but the account that's accepting the token, where XLM, I don't. And the reason why XRP is like that is, like I said, if you were running a banking organization, if I was running the Federal Reserve, and let me show you a good scale version of this. If I was running the Federal Reserve and I wanted to have absolute control over the amount of money being issued in the economy,
listen to
all
this.
you have to do is basically say, okay, Bank of America, Goldman Sachs, Chase, all you banks or whatever, we're going to set you up with these primary crypto address accounts, and then under those accounts, you're going to have all of your user accounts under them, and then under the user accounts, you can issue the tokens under them. So what ends up happening is right off the bat, all the money that's sitting in the banking system would already move over onto a digital blockchain system without them actually having to fit around and try to actually move that money over and be able to get the maximum amount of liquidity in the shortest amount of time. But then what ends up happening is because you have to have the rights to be able to move the token, anybody that wants to make a payment, it'll seem like they're making a normal payment. But in reality, what's happening is you're making a payment. Your bank is basically signing the transaction to go from one bank to another bank. And you basically have to have a bunch of banks sign transactions between each other. Now, why is this important? One, you get the auditing of the IRS is able to audit these in real time. Not only are you able to audit it in real time, but it almost makes it impossible to steal money out of people's accounts. Because like I said, you've got to go through the bank to move money from one account to another account. You see what I mean?
But what I don't get is how do they have 3-second transfer times if all these banks need to check the transactions are okay?
Listen to this.
So with how the decentralized network works is, and how it gets and it's actually not even checking to see if these transactions are okay. The overall network's checking for these transactions. But the main reason why it gets and this is actually another crazy tech thing that people don't talk about. The main reason why it gets a 3-second transaction time is the algorithm that runs the consensus on the network is running every 5 seconds. So there's constantly a consensus algorithm between all the nodes that are constantly reading against each other every 5 seconds to get consensus. So what ends up happening is within the 5 seconds, as you make a transaction, you're already mid-consensus for every transaction that's being made. So instead of having proof of stake where people would put up a bunch of stake in the hopes that they operate cooperatively on the network, or proof of work where you have the biggest computer solve the riddle first, there's just a native consensus algorithm on all the XRP nodes, and this would be all the banks that operate, and all the nodes instinctively have a native algorithm that are constantly running every 5 seconds to get consensus with each other. And XLM is also the same way too. But this consensus algorithm is the backbone to the performance of why XRP is able to be so fast. And it's actually a little bit different because XDC is also proof of work. But one of the reasons why, and I don't know if you know this too, but XDC has like a 6-second transaction time speed. And the reason why it gets its transaction speed is not because it has a native algorithm, but because it operates off of a notary system. So what ends up happening is you can choose who you want to sign your transactions based off these notaries. And I'll actually get more into this when I get into Corda. But the notaries can not only be other companies, other nodes on the network, but they could also be regulators, basically notarizing regulatory clear actions that are happening on the network. So the main reason why XRP is operating so quickly is because of the native algorithm. Now, the reason why I say the banks have to operate these accounts, to operate any XRP account, anybody can start up an account. But to operate a account to where you can issue underlying assets, you have to have control and rights to the underlying accounts. This is why I say this is why the banks would use it. They have one account as the bank, all the underlying accounts being the bank accounts, and then they can issue you your currency, your stock, your bond, whatever to you. Yeah. And then you end up getting this level of security because if I wanted to hack your account and steal money out of your account, I couldn't do it because
you'd have to only send it to your account or someone else's registered account.
Exactly.
Yeah.
Exactly. And that's the thing. If let's say we both were operating off Chase Bank and I hacked money out of your account and put it into my account. Well, Chase saw everything that just happened. Chase saw everything that just, so there's really no way you could hack money out of people's account when it comes to a system like this because of how structurally sound the permissions are when setting up accounts that can issue underlying assets. Now, if you just wanted to make an account that can the reason why they need permissions to issue those underlying assets is because of how that broader gateway banking structure works. It doesn't work without that. And the reason why I say XLM would be like cash is because they don't need that broader structure. If I had $10 over here and I wanted to issue $10 worth of currency on XLM and then send it to you, I don't need a special permissions to do so. But if I want to run a banking organization on XRP, I do. But that's only for underlying assets. If I just wanted to send you XRP, I could go make an XRP account. I'll send it to your address. Don't worry about it.
Yeah.
Crap. What was I saying?
So that's why you believe XLM will be used more than XRP for central bank digital currencies.
I think it's going to be.
Because it's easier for them
it's one of those things where, yeah, it's
a lot less
so.
hassle.
In a general sense, I don't know who would end up being bigger. It comes down to how you want to look at these markets. Who has a bigger market? I think Stellar is going to be used, like I said, central bank digital currencies is going to be the number one use case for XLM and Stellar. I think XRP is going to be used as a back-end bank settlement token in regards to not only cross-border remittances, but domestic remittances. So when, like I said before at the beginning, where I said,
because everyone's forgetting the domestic remittances market. Everyone's talking about the 50 trillion cross-border, but within each country, there's more trillions, especially like in the US and. Yeah,
it's practically the banking system. It's practically the financial system. And that's the thing. Remember, I was telling you how slow it is, and for every $100 that they have that you may have in your bank account, they only have one on demand. Well, this essentially solves that problem, because what ends up happening is instead of having, like you said before, instead of having to worry about being able to. One, if you need to borrow that money, you can get it instantly. You don't have to spend however many days it takes to send the money. But two, when someone asks for their money, you don't have to go, oh, give me a second for me to get this payment that's already on the way to come through. Their payments become instant. So a typical transaction that, let's say you're a bank and you wanted to pass a $50 million transaction, and it took 4 days to do so from all the different things that have to come play to move that money. Well, it would take a couple seconds. If you want to move billions of dollars, it take a couple seconds. So that all that clogged up piping in the financial system, from how slow money's moving around from bank to bank, institution to institution, merchant to merchant, merchant to bank, all these different moving parts will now be able to move up freely, quickly, and effectively with XRP, and not only between currencies, but between primarily derivatives. So it's almost like this.
Listen,
I think XRP will be used for digital currencies, but not public digital currencies. Almost like the same way where banks may deal with each other in bonds. They may make a purchase in $1 billion in bonds. People aren't going to buy their house in bonds, but I think they may end up treating the bond market in XRP so they can treat those bonds like cash. Where the regular user, the same way that you're not going to accept just like bonds in the banking's eyes is the same as cash, except you get some sort of return on them. That's the thing, though. If you're going to be using it as cash, it doesn't mean it's the same thing as cash. So it's almost like we're going to have this front-end, back-end cash system of the back-end domestic and cross-border remittance cash system to move cash that way, and then the front-end cash system, which is basically going to be like me sending you $5.
Wow. This guy is laying down fire. Now I want you to hear here, just moving it to here, and there's only 2 more clips to hear. They're very short, but I'm going to tell you something. This guy is laying it down, explaining XRP and XLM, how they work in the new financial system. Whoa.
To the private ledgers, and to actually get a crazy thing about that. What I said before, when it comes to like the accounts where the bank has their account and they have all those underlying accounts, that's exactly what I mean when it comes to private. Those are private ledgers. Every single one of those. Every time I say that a bank has XRP and they have all those underlying XRP accounts, those are all private ledgers that they're operating off of. And the main portion of the private ledger is they're able to do internal accounting without it being on the public blockchain. Even though they're getting all the utility and all the use case from the public blockchain, they're still able to get that private accounting within their users' accounts on that private ledger.
Get some of that. And let's move here to the last clip here at 20 minutes. And it's just about a minute or so here. And listen to what he says here about the effects of the new financial system and the use of liquidity tokens like XLM and XRP, and basically how the Fed could, in his speculation and just looking forward, could absorb a lot of these other banks out here, and other central banks as well could do the same.
And acquisitions within the banks.
Oh yeah, there always is. Every crisis there always is, and it's mostly because one bank's going down, and if this bank goes down, they can't pay this bank, so they end up merging together so they don't lose money. But then this always happens, and it's one of those things too where if a bank were to go down, there's accounts that would be totally destroyed. There'd be giant economic impacts with that too. So you're gonna see mergers and acquisitions up the wazoo. See, here's the thing: the real question is not who's doing the mergers and acquisitions, but what are those banks considered after the mergers and acquisitions? Because you may end up seeing one big acquisition into the Federal Reserve, where there's the Federal Reserve, and then there's all the little commercial banks that really are just the Federal Reserve. They're just operating as
different
brands.
Names.
Yeah, basically. Basically. That's the thing, you got to remember, this is all one network. Do you think each bank needs their own traditional SQL database for payments if they're all operating off XRP? And if they're all using XRP and they're all using the XRP Ledger, then what's the difference between Bank of America's banks or databasing and Chase Bank's databasing? There is no difference. They're both using XRP.
There you have it. A Corda developer revealing how XRP and XLM work in the new financial system. And guess what? It is the new financial system. Again, shout out to Matty GTV. Make sure you follow him. Give him a like and a follow. This was straight fire. And don't forget, it really is about all the money, isn't it? Ripple pilots a private ledger for central banks launching CBDCs. Bring XLM in on this too. We got the front end and the back end, and we're off to the races, ladies and gentlemen. That's going to do it for me. Before I get out of here, I do want to tell you about Link 2, ladies and gentlemen. It's private investing made simple. Let's see what's still on the board here. Let me do a little refresh for you before we go. Oh, wow. Uphold still got some shares left here if you want to get them, and keep an eye out for Kraken and Ripple for to pop back on the board. This stuff doesn't last long. Or Automation Anywhere or Carbon. They're doing everything from shoes to Lamborghini parts. Make sure you check all this stuff out, and I will catch all of you on the next one.